This MACD hybrid strategy I'm about to show you is one of the highest win rate strategies that you can use in your trading. It's very simple to use, works in almost every single market, and most importantly, it makes money. Well, that's enough talk. You want to start making some money in the markets? Let's get straight into it. Now, if you're an intermediate or experienced trader, you've quite probably used or seen a MACD before. But on its own, a MACD is just, okay, in all honesty. There remains a lot of discretion to be profitable with it. So be sure to watch the full video to see how I back it up with other indicators and rules to make it perform superbly.
This is amazing!
First things first, let's add the MACD indicator to our chart. I am using a Relicus Road MACD indicator off the MetaTrader marketplace. Now for my backtesting setup, I'm using MT4, MetaTrader 4, because that's what has to be used for it, but this indicator is available on MQL5 for MT5 and MT4. Basically it's a standard MACD indicator. So how does the MACD work? The concept behind the MACD is straightforward. It calculates the difference between a security's 26-day and 12-day exponential moving averages. Each moving average uses the closing price of its period to calculate its moving average value. On the MACD chart, a 9-period EMA of the MACD is plotted. This line is called the signal line. It acts as a trigger for buy and sell decisions when it crosses over the MACD line in the correct context. The signal is considered the faster line because the points plotted move more than the MACD, which is regarded as the slower line. The key components to look at here are the signal line, the MACD, the histogram, and the zero line. How we want to use this indicator for going long is by waiting for the lines to cross upwards, but only if they cross below the zero line. If they cross and it's above the zero line, you would not enter a trade. It's the same thing with shorting. You only enter a short trade if the lines are crossing downward and are above the zero line. As you can see, this indicator is extremely easy to use, but the problem most traders have is trying to rely on the MACD on its own. The MACD indicator works superbly if the market is trending, as opposed to ranging. For example, here the MACD indicator is doing a great job indicating when the price is about to move down because the chart is in a downtrend. But there is a problem. The price here is in a downtrend, but the MACD is still signalling to buy long even though the price is going down. To fix this issue, we're going to use a pair of EMAs to confirm trade direction. We use the 5-minute chart and 1-hour chart for trading this strategy, and all execution is done on the 5-minute chart. The 1 hour is to see the bigger picture with a higher time frame. Once we add the EMAs, which in this case are the 20 and 50 period EMAs, we will now use this as a confluence with the MACD before entering. This removes a lot of noise. The EMA in Forex is a type of moving average that gives more weight to recent prices, which makes it more responsive to market movements compared to a simple moving average. You can see here how we have got the EMAs set up. As you can see, they're plotted on the chart here. But when we combine the MACD with as an early predictive hint about a market move, and we have the EMAs to confirm the move, we do need to add one more critical ingredient to this strategy, any strategy, to make it super hot. Add into the mix price action, key trading levels, aka support and resistance, and we now have a really powerful and usable trading strategy. All trading strategies have a degree of discretion, in other words human judgment, unless they are purely algorithmic trading strategies. In a trending market, the MACD and EMAs are a fantastic tool when used properly. In a ranging market though, things can become a lot more muddled and inaccurate. We always need to be using key levels with any trading strategy. Price action is the final piece to the puzzle of a profitable Forex trading strategy. So if we take a look at this chart here, and we will identify a few areas of some interesting price action. So this level here is acting as a support, which is then broken, and now is it acting as a resistance. Things like this here can be muddled when relying on indicators like MACD and moving average. As you can see, the moving EMAs are not giving us any signal to trade here, and the signal here is indeed correct, but we have to be careful in chop. So as we can see, this is on the hourly time frame, so we are moving quite quickly through the days. As we can see, the market's heavily ranging here. This level is acting as a magnet for price action for some significant time, and we are waiting for some kind of a breakout in either direction. As we can see here, we're getting another key level here, which is acting as a support level, 1.1236. And if we keep moving through time into December, always quiet around end of December, not a good time to be trading. So as we can see, we've now broken this high that was in our ranging pattern. We get a nice crossover of the EMAs here. MACD's crossing over under zero line. Let's see, we've got a nice uplift in price until we get to this level, 1.148. Bearing in mind this is on an hourly time frame, so that's a very significant price move over several days. Let's zoom out and see if we've got another key level, and what a surprise, we have another level here that price has touched several times over the past month. So that's just an intro essentially into factoring in levels into your trades. Always zoom out and look on a slightly larger time frame before entering, and always mark some key levels up. If you're in an unfamiliar market, I would advise only trading the major forex pairs, certainly initially, because there's more liquidity and much tighter spread. Now I will backtest 100 trades.
A few moments later. Boring.
I said, hold up, wait a minute.
We know your time is valuable. Thank you for holding. Someone will be with you as soon as possible.
Whoa, that was close.
Well, we're waiting.
Hurry up already, eh?
Here are the rules of the strategy. Check the news of the day. Forex Factory calendar works well for this. Note times of red news events and avoid trading during the actual news release. Check the trend direction on a 1 hour chart or higher time frame. Trade major pairs, they've got a tighter spread and greater volume. Trade in the direction of the higher time frame trend, either pullbacks or continuations, until you're proficient with the strategy or unless the market is ranging. Use the MACD crossover and EMA crossover in combination with key levels to enter your trades. Use a risk reward of 1 to 1 until you're in profit, and a buffer allows a use of 1.5 or 2 to 1 on stronger setups. Confirm signals by looking for higher highs or lower lows. Take trades off the 5-minute chart. Use 1 to 2% risk per trade until you're proficient with the strategy. From there, I would recommend increasing to a maximum of 5% when your profit buffer gives you sufficient margin for this. Always use a stop loss. Place the stop loss where your trade idea is invalidated. This MACD hybrid strategy has the following statistics from this backtest. Risk reward 74 wins, 26 losers, which is a 74% win rate. 247% profit. Initial $10,000 starting balance with a profit of $24,746 in this set of trades. Average winner $437.45. Average loser $293.27. The backtest trades were conducted between 20th of December 2021 to the 15th of August 2022. So I just revealed to you how the MACD and 2 EMAs in combination with using market structure gives a high win rate with this very profitable and usable strategy. All I ask in return is for you to take a few seconds of your time and like this video. If you want to stay up to date with my future strategies and videos, please do make sure to subscribe and add a comment if you want any further information. I'll be happy to help, because in my next video I'm planning to release another strategy that is very profitable for scalping in ranges. I do hope you guys learned something from this video, and I'll see you all next time.